I'm going to make some 2022 second half real estate market predictions. You're definitely going to want to watch this one. It's been quite the first half of 2022. We have gone from rates being in the 3s all the way up to north of 6%. We've seen homes where they get 15, 20 offers, no contingencies, all cash above the asking price, and now 6 months later, as we're into the first week of the second half of the year, we are seeing the market go in a completely different direction. This has been quite the whirlwind for consumers. So what I wanted to do is read all the tea leaves, understand the headwinds, and give everyone watching 4 predictions about the real estate market for the second half of 2022. Some of these are going to be right, some are going to be wrong. What I know is I've done my research, I've talked to the people that are in the know, and I'm looking at what's actually happening in the market on a daily basis so that everyone can be clear on the best advice out there to make a well-informed real estate decision. So here we go. Number 1, there will be no real estate market crash. There is no housing bubble, and prices will continue to increase through the end of 2022. The reason I say this is we've got a supply and demand issue right now, especially in the greater Philadelphia area. We've got very low supply. A normal market where buyers and sellers have equal leverage is considered a 6-month supply. Right now in the suburbs, we're at basically a 2/3 month supply, and in Philadelphia, we're just over 2 months. That's how long it would take to liquidate the existing inventory. And what I know is before the pandemic, when this frenzy started, when this incredible market was first coming into play, we had about a 3 to 4 month supply of homes on the market. So until we get even past that, and remember in 2019, we still had multiple offers, we still had people bidding against each other, so these conditions were there. They just got very extreme since then. We're not going to see prices go down. Until inventory comes up substantially, prices are going to stay where they are and keep increasing. They have decelerated, no question. Prices are going to continue to go up. There's no doubt about it. That's prediction number 1. Prediction number 2 is around mortgage rates. And what we know is that rates are coming in right now about 6.25%, depending on what bank you're using, credit scores. There are some variables there. I'm clear rates are going to continue to go up a little bit more and approach 7%. And the reason I say that is the Fed is very clear. They're going to be raising the rates at their upcoming meetings. And when they raise that rate, they don't set mortgage rates. We all know this. When they raise the key interest rate, it has influence on what mortgage rates do. What I also anticipate here is that if you saw the last meeting in June, rates went up, mortgage rates went up before the Fed meeting even happened. So there could be the possibility that rates may have already baked in the pricing of where they're going to go to based on future Fed actions, because the Fed has been so clear, hey, we're going to continue to raise rates. We have to fight inflation. Inflation's a problem. And you're still beating inflation by buying a home right now because inflation's north of 8%. You're in the 6% range, so that's a win for consumers. Rates may tick up a little bit more. I don't see them going past 7%, and they may stabilize where they are. So that's prediction number 2 based on the market reaction to what the Fed has been saying all year long. Prediction number 3, and this one's going to be a little more interesting. We're going to see more inventory on the market come the fall. We're going to see buyers having more options in terms of homes that are available, because what increasing rates have done, some people can't afford the home they want anymore. What increasing rates have also done is created a little uncertainty in the market, and it's flagged some sellers to have their antenna up and realize, hey, this climate's not going to last forever. If I want to cash out high, I want to get the max value for my home, now may be the time to do it. So you have increasing rates influencing the decision making of some buyers pulling back, although there's still a ton of demand thanks to millennials, but some have pulled back, there's no question there. More sellers coming to the market, and also what I see happening here, and that's going to cause the inventory increase, is that we have a real seasonal market this year. This is not the seasonality that we've seen in 2020 or 2021 where there was no season. It was go, go, go. Remember, 2020, we couldn't even go out and show homes until May. That's halfway through the spring selling season, and the summer was bonkers. It was bananas. It was incredible. So we're going to see more of a seasonality, and that's when you start to see homes sit on the market longer. We've already seen it. People are dropping the price on their properties. There's days on market increasing, which tells me there's going to be more option than buyers have had, which tells me there's going to be more options than buyers have had over the past 24 months, and they're going to be pleasantly surprised by what goes on over the next 3 to 6 months. The last reason and the last cause for the effect of increasing inventory in the fall is we've already seen active listings, newly active listings, outpace pending sales since the month of March. It hasn't been a lot. It's been a few homes, and it's increased slowly. And when that starts to happen, that tells you the pace is slowing down because rates have gone up, some buyers have backed off, and sellers are realizing they might need to cash out at this point. So seeing that initial indicator tells me it's going to continue as we go through the months of July, August, and start to hit September. So that's why inventory is going to increase. And a lot of people like Danielle Hale from Realtor.com, their chief economist, Lawrence Yoon, the chief economist of NAR, they've made the same observation, and I like their track records. So prediction number 4, this is for all my real estate friends that are out there. We are going to see a 20 to 30% decrease in the number of agents in the market. Over the past year alone, 100,000 new people have gotten their real estate license. And let's face it, a lot of them have really poor fundamentals. They don't know how to do the basics, like give a buyer presentation, show how the process works, negotiate a home inspection. Yes, basics and foreign to a lot of these folks. And we've already seen the number of agents decline for the first time in a decade. Back in 2012, there was just over 1 million agents. Now we're looking at 1.5 million plus, and there's less homes that are selling right now. There's no question there's going to be less homes that sell in 2022. We're looking at approximately a 13% decrease in the number of homes that are selling. So there's more agents fighting over less sales, and a lot of these people don't know how to survive in a normal market, because in a normal market, we see home inspections. We see days on market last a little longer. We don't see as many multiple offer situations, which is where we're going to. The market's normalizing, not a bubble being burst. It's normalizing, which is why I'm a big believer in prediction number 1. This is how things were in 2017, 2018, 2019, and those were all really good markets. So knowing this is the case, what I'm clear on is that we're going to see people that can't hack it, don't have the skills to survive, don't want to put the work in, or they're in a spot where they're not getting into real estate in the first place because of the economic uncertainty right now. They don't want to leave a salary job for a commission-based job. So those are our 4 predictions. Some may be right, some may be wrong. I'm feeling good about them. If you got questions about any of them, you know where to reach us.